Good morning, team. Happy Saturday. It's the 25th of February, weekend members video. So, I am going to briefly cover the market from what I'm seeing and, just reiterate what I've been posting throughout the week. And I got a handful of stocks for the watch list for the week. They're really, I went through like almost 750 charts and there was like a handful of things that really interested me. I mean, just the market is not looking too good, as you can see. Um, we're down at the 200, just touching it, and this support right here. Hopefully, this will hold. But back when we were over here, and we were holding the 21. The very next day, we just sliced right through 21, 34, 55. We made a little bit of a rally. We came back to this little resistance area, and then we dropped back down again. The good thing is they've been hammer candles, so they've been reversing back towards the end of the day, which is strength. But look at on Friday, it just finished right at the 84. Didn't have a chance to get through. And if you notice, this 61.8 retracement, that level is kind of like where it went to. So all these levels that I have here, I leave them on there for a reason because they matter. And if you could tell, it mattered here. It mattered here when we went through it. It mattered right there the next day. And then when it comes back down to it, look, boom, pierced it, and now we're holding it again. So all these levels, mean something. So once I see a key movements and I draw these levels, I kind of leave them on there, even though it might look a little bit busy. And I know it does, but you can kind of train your eyes to look for what you want to look for. So you have key levels that you wanna see that if it breaks through, and then that's the next level of support. So you can plan your trades accordingly. Because if you see it coming off a key level and holding, and then a little bounce, okay, that level was strength. Now you have some conviction that you might want to go long. Key example, right here, when we broke this level right here, right, and then we went back down to it again. When we saw this, and this, and then we broke right down to it again, I knew this level was strength. So I didn't want to get too long here until we got through it. Now, once we get through it, this day here, if you notice, we kind of hovered around it for a while. Right here, right here, right here, even went lower, but then it held the 8 going up on this third day when it broke lower. And then once it did break that one right here, it went all the way up, almost to that, our key resistance of 41.92 from, let's say 40.40. So that's a nice move. So once you see this, okay, this is going away from this prior congestion area and support. Okay, I'm gonna get more aggressive and buy. And if you notice, it held the 8 all the way up until it didn't, and then once it doesn't, then it's going down. So all these things you got to take them into account. You got to kind of plan your trades according to the overall market. So once the market's taking off, you can have a little bit more stronger conviction that, okay, I'm going to put some longs on because I have the wind of the tide of the market behind me to push these stocks up. And then once you don't, then start taking profits because you get stuff like this. You go from like somewhere in the around the 4120 area, breaking down 4,000. That's a couple hundred points. That's a lot of money if you just holding stocks and you get this drop. That's why I like to sell premium because I see key support and resistance level, and then I go just under that and just over that to sell premium. And as long as the market stays within that range, or doesn't violate it too aggressively, you can consistently, repeatable make money. Um, it's I call it the SRC system. When you have um, uh, I forgot the I don't know if I'm still recording. I hope it is because I paused for a while. I thought I was pausing. I had to take a sip of water. Okay, so my SRC system, which basically you have a systematic SRC, systematic, repeatable, and consistent. So when you have a systematic approach to trading, you know what you're doing systematically. There's no emotions and thought process. If you see something, you do something based on what your system is. It's repeatable. You're able to constantly extract money out of the market because your system is repeatable. It's not just a one-time thing where like, oh, you see this big breakout on earnings and you try to catch this big breakout. That's not something that's repeatable, and it's something that's consistent where you constantly you know doing your systematic approach in a repeatable manner that is consistent and is profitable in the long run. That's kind of what I'm trying to adhere to in my trading. So back to what I was saying earlier, there wasn't that many stocks that I could find. There weren't that many stocks that I could find that were anything you know good to like even look at, because the market is crappy. It's let me look at the I wanted to show you guys the 30-minute, so you see what I was looking at throughout the day. If you notice, obviously downhill since somewhere around here since Tuesday. We've just been going downhill on this channel right here. And if you notice, we go down a little bit. Again, I have big three 30-minute sell signal. It started over here, so it's been obviously that was a good true signal because we've been going down ever since. And if you notice, every time we go down a little bit, and we've been staying on the below the zero line, pretty much just except these few days here we had a nice little rally, but we came right up to resistance on this 34, and then these levels pretty much every time we go up to a key level, we fall back down again. Now, the good news is we have this gap here around 40.10. So from 40.10 to like 39, we still have nice little chunk of change here to kind of come up to. So like this gap here, when we gapped up, from here to here, we closed it like the very next day. Even back here, we still have this gap up here, 40.70 to fill. So let me right here. There's a gap right here that needs to be filled. Okay, so that's some sobering news that we should be able to get a rally sometime. In March is usually a strong month. February is usually a sucky month. So I'm expecting the first half of March to be good. Usually the last few days of March are not that good. So we might get a nice little rally, at least to cover this this gap right here. So what I was saying, every time we go up to a key resistance level, we fall back down again. And then here we gap down, we kind of try to rally back up again. And we stay right in this little area here, which is, let me put this even better here, right here, which is that 61.8 retracement that I was showing you. We were right there. And it coincides with the 21 EMA period on the 30. I'm on the 30 here. So it coincides with that. So all these key levels, so we need to break out of this level right here, 39.80. 39.80, then we have 39.85, and then we're probably going to go up here to 4,000, 39.91. I don't see us, breaking out of 4,000, strongly. We're gonna hover around this area for a while. Maybe we test it and then maybe take off. So that's why I've been selling premium up here. I've been taking profits, and then once we saw this little bounce here, I've been selling premium down here in the 39.20, 39.10, which is the 391, 392 range on the XSP. So that's kind of where I'm seeing these things go. Back to the daily. Again, we're pinning on the 200. We're pinning in this support level. So let's see if this holds. And if it does, We got to break above this, 39.85 range. And then the next levels are right here. Again, we're back to this level here being now a level that matters because we're below it. We're below it. So we need to break this level again, which is that 4,000 level. 4010 level. And then this is resistance. This is gonna be resistance and so forth. So let's see. That's kind of like what I'm looking at. If I see these key levels hold and we go back down, then I start aggressively selling premium up here and stop my long buying. And if I see these levels hold in the bottom and we start pulling higher, I'll start aggressively selling premium down here and start looking for my long buys. Basically, what I've been doing, I've been selling premium on some key stocks that were just beaten up, and the premium was a little bit heavy, so I was able to get some nice change there. So I'm basically right now, this directionally it's very tough because the market is so choppy. The directionally is tough. So what I do is I sell premium on the bottom where it gives me a chance to at least I could be wrong and still make money. Like for example, like this is a good trade that I made some good money on here, but then it just gapped down again. But I have a 25. I want to add to it. I have a 25 right here somewhere. Yeah, I have a 25 strike premium that I sold. So I have the 55. I have the 84. I have this level of support, this level of support, which also coincides with the 200 day moving average. So a lot of levels that this has to break through to get myself endangered on break below 25, which again at 25 this stock looks pretty good. I wouldn't mind doing that, and then you sell. You kind of run the wheel. You sell premium if you get a sign, then you start selling calls above it, and then hopefully the stock rises up a little bit, and then you get the stock taken away from you, and you make money on both sides. That's basically the concept. It's just like probabilities. I don't need to be right. I just can't be wrong. I don't mind being wrong. I just can't be wrong like a lot. I mean, not a lot, like a big wrong. Like it goes down like 50% or something like that. But again, I digress. So the ones that I've been looking at, the ones that I wanted to give you guys in the watch list, I'm gonna put it in the email. There aren't that many, but let's just go through it real quick. HGV. I have an alert here at 47.38. It's got to get out of this congestion. If you notice, this is the squeeze. It's looking as it wants to fire to the short side. That's why I'm not buying right here right now, even though I do have a big three buy signal on the daily, so that's positive. And I have the support right here at the 50, which coincides with the 55, and then this level here at 44. So again, I don't want to be a buyer right here right now. I want this congestion to break out to the top side because I have red bars, I have red squeeze. So it's telling me, and I have earnings coming up. So again, I'm only looking at this, but it's gotta break out for me to get involved with it. But it looks like it's setting up pretty decently if the squeeze does not continue and fire short. Um, the next one, I got a handful of them. 1, 2, 3, 4, 5, 6, 7, 8, 9. I only have 9. VTYX. VTYX. Okay, VTYX again. I put an order to buy 150 shares, right at the 21. If it kind of comes back down inside of it again, I got a big three buy signal fresh. It's been a buy signal for a while, but this just came in reinforced fresh. I do have a squeeze here. I have a 4-day squeeze in the pro. This one is the yellow one, which is like even stronger. This gives me like a 14-point move on this with a 2-point ATR, so that's like a good ratio. Even if I get the red, I get 5 to 2 is still, almost like 2.5 to 1. I mean, 1.5 to 3 kind of thing. So again, I'm a buyer. If it pulls back to a 21 with a 21 as my stop, and then also I'm adding to it if it breaks above this congestion right here, around 44. I'll add. Let's say I'm buying 150 shares. I'll add another 50 shares above here, and then let that run as far as it kind of breaks back inside the 8, and or the squeeze already fires, and then I start getting blue, dark blue momentum, because if you notice here we had a squeeze right here. So the squeeze started on this day, right? So let's say you were vigilant and say, okay, I'm not buying anything extended. So you buy once it comes inside the 21, like we're supposed to. We don't buy way too extended above the 8. We our sweet spot is right here between the 8 and the 21. That's our sweet spot. It coincides with this in this particular scenario back in January. If we would have been looking at this, it coincides with this support level, which is right here. So that 21 is your friend here. If it breaks it, you stop out. You buy right here at 30, 32.5 or so. The squeeze is on. This sucker takes off. The squeeze fires right there. That's the first day that it fires. You see the blue dot. Let me see here. Yeah, right there. So that was this day right there. Is that this day? I think that's this day right here. That's this day when it fired. But you were already in it from right here. So over here, you're already $4, $5 in profit. So when do you get out of this? You start looking right when you see the first blue bar. Even though you start momentum bar, you got an early indication here. Again, this is the pro, so I get this early indication. So I'll probably be getting out right here, somewhere around let's say 40.5, around there. It's a nice 10-point move on this stock, and again, it coincides with the first blue bar right there. So that's a squeeze. That's the power of the squeeze. Now it's setting up again. Okay, so that's why I like this stock. Hope that helps you guys. Okay. R. Again, it's another one that I have here. Squeeze is setting up. Got a 1, 2, 3, 4, 5, 6 day squeeze here. It already passed earnings. It already passed the dividend payment, which is usually when you have a dividend payment, the stock goes down by the value of the dividend. So that all that already happened, and now I got a squeeze here. Again, last time I had a squeeze was somewhere around here. Boom, took off. So I'm a buyer here near 21 with just below this low here, 95.48 around there. Is my stop, and then I'll be adding on if it breaks these levels here, all the way for a $100 run. So this is setting up nicely. If you're gonna let it break on Monday and I can buy 100 shares right around 90 96 or so, I'll take it, because I'm risking basically 50 cents to probably make $4 or $5. Okay. The next one, ROK. Same concept. I got a long squeeze here. This is a congestion right here. All this right here is like just been a big long squeeze. Right here, see the black dots on the pro, and now it's picking up the red. It already passed dividends, so we already got that out of the way. Earnings is out of the way. Again, last time we had a squeeze was somewhere around here, and then that gave you a nice little profit. So I'm a buyer near 21. I'm stopping out, below a 21. Just wash, rinse, repeat. Same concept. Just gotta look for these things. STLD. Now also, the market's gotta cooperate. If we got a big sell-off, None of these things are going to work, obviously. So you got to have the market at your back. Okay, this one, um, the reason why I'm looking at it is because I got a fresh big three daily buy signal. Okay, I like that. That's encouraging. Another thing that's encouraging, got a hammer candle. Okay, kind of came back inside on top of the 34. That's encouraging. I got support right here, right around the 110 area. So right on the 50. So this is the beginning of a squeeze. I have a 3-day squeeze. I prefer a 5, so that's why I'm not a buyer at these levels here because there's a lot of empty space here. I'm only a buyer if it breaks above Friday's high. So I have my alert set at 118.94. I'm probably going to be a buyer anything above, the 21, around 119 something, and then the 21 is going to be my stop out. That's kind of how I'm looking into this one. AYI. Again, I have alerts on both sides. I'm a buyer on both sides. I have a squeeze here setting up, 3-day squeeze. So hopefully I want to take a bit longer. It already paid dividends. It already had earnings. So this is all out of the way. Last time we had a squeeze, you're looking at it right here. This is a squeeze. This sucker paid off big time on this last squeeze. So I'm a buyer near the 21, somewhere around 189, 190. I'm a buyer, and if it breaks out above the 8, I'm a buyer at 192, with now the 8 being my stop. And if I buy down here, then my 21 is my stop. Simple. Low risk entries. If it does take off, I'll take the ride up. 8 is my stop. If it kind of pulls back a little bit, gives me a lower cheat entry. Beautiful. My 21 is my stop. Just that simple. Don't complicate things. Okay, the next one. CRUS. Okay. CRUS. Same kind of concept. I'm a buyer near the 21. I don't have a squeeze. That's the only bad thing. I don't have a squeeze. But I do have a big three daily, right here. I do have a daily buy signal on here. It's been going on for a while. It's not fresh, but I mean, the stock has been, broke out right here from 88 and went all the way to 100. So that's a nice 20-point move. The last time we had a squeeze, it was somewhere around here. Was consolidating, and once it broke out, you went from 80 basically to 100. That's a nice move. So it's kind of going sideways for a while. Let this kind of play out. I like it. I like it that the 21 is holding. So I have no problem being a buyer somewhere around 100 because my stop is going to be like 98, 99, and change, or just below 21. Simple as that. If it does break out, I have this trend line here. So if it does break out from the trend line, I'm also going to be a buyer, and then that breakout price, that low of that day, is going to be my stop out if it does break out. Okay, simple. Two more. WTS. Same. If you notice, it's a theme, right? I'm looking for the exact same play. Simple. I don't complicate things. I'm not looking for a million shiny objects. I'm looking for one trade in particular that I know it pays off. How do I know it pays off? Because last time this had a squeeze, it was squeezing right here. You're a buyer right there at 152, and this thing went all the way up to where it stopped you out at 175. Okay, I mean, you cannot not understand this. It's so simple. Just look for a squeeze. Look for an entry above the 21, below the 8, and then your stop is at 21, and then write it out until you get stopped out. It's just that simple. And if you have resistance levels that you're inside of it, wait until they kind of break out. If you want to wait a little bit longer, then you're a buyer right here. Let's say at 157. Let's say at 160. You bought it at 160. Well, you got stopped out at 173. You still got 15 points, on this. So, again, the only bad thing here is I got dividends coming in. So the stock is going to drop a little bit by this 30 cents, which is not a big deal. So, I'm a buyer right at the 21 at 171, and I'm a buyer at 172.78. If it breaks above Friday's high, then you get a nice little breakout. Then the 8 is going to be my stop. And if I own these shares, I'm going to pick up another 30 cents profit on this on the dividend. Okay, last one. Sky. Same thing. Okay. Nice bar here. Nice bar here on a very nasty down day. This thing was up a little bit. So I'm a buyer. If it gives me a chance to pull back to the 21, I'm a buyer. I got a big 3 daily buy signal. Okay, so I'm a buyer at the 21. I'm gonna stop out of the above 21, and I'm also a buyer. If you notice this congestion here, you got 1, 2, 3, 4, 5, 6, 7 days, and then almost 8 days. Just say you got a week of this level of six. Of this basically 70. This level of 70 being an area of congestion, right? So I'm a buyer above it, because if it goes above it, this thing takes out 3 or 4 points. So, and then when am I stopping out? I'm either going to stop out below the 70 or let the 8 be my deciding factor, because in this case here, it came back inside of it and it held this up. I'm a buyer above 69.81 or on 70, and my stop out is the 8. Okay, I hope that helps, guys. Again, just stay vigilant. Go with the flow with the market. Look at lower time frames in the market to kind of see short term, very short term support and resistance levels. So you have an idea if that level holds. Then if you see a setup on a long, then you can take it. Or if you see the market coming up to resistance, like for example, go back over here. Give me another SPY. It's the same thing. For example, you see the market. Okay, we'll load. All right, you see the market coming. Had this nice little run up, and coming up to a level that kind of before it held, and then it held, and then you see this kind of holding again. Or even if you see this happening, and then you see this bar, and you see it coming here, say, okay, well, and then you see it coming up to a key moving average. This might be a little bit extended. Let me not get too aggressive in my longs. Let me not start initiating positions at this level. I mean, I would not be buying, at this level when I'm seeing it pull up to a previous resistance level. And I wanted to see that it breaks out of it for me to start going long. And then what happens the next day? You got a huge big gap down. So what happens here? I start taking profits. I start reducing my exposure. As far as I'm not adding anything new, I'm reducing my exposure by taking profits, and I'm raising my stops to minimum break even if I have a profit. Because it's telling me that, hey, we're a little long in the tooth here. We're getting up to key levels that prior we did not clear them. I want to see proof. Show me that you can break out of this level before I start getting excited about going long again. So we're down here. This is up here again. This is 402 around there. That is 40, 50 points in the S&P. So we need 40, 50 points in the S&P just to get back up here. Now think about it. If we get a 40 to 50 point rally on the S&P, do you think that's going to be a little bit extended short term? Yeah. So what's going to happen? We're going to go back to this level. This is going to matter. We're going to stall here for a little bit. We might retrace, and then we're going to fill this gap right here. Everything's going to just play out like it's supposed to. I mean, I'm telegraphing it for you guys right here. Okay, 40, 30. It's going to be a level that it's going to be hard to break. Once we do, then we have another 30, 40, 50 points higher. But we can get our 40, 50 point rally on the SPX and stall out. So take advantage of that rally, sell into profit, sell into strength, take advantage of any moves like that, and then look for key levels and see what happens at those levels of interest. See what happens, and then act accordingly. Hope that helps, guys. If you have any questions, I am here. I have a wealth of knowledge that I can teach you guys and share with you. So do not hesitate to ask.